All right, we're recorded here, and I'll send this over to everybody in the room a little bit later on today. So as long as you guys can hear me okay, that's great. Um, so I just wanted to do a little bit of get together with you guys. I'm not doing webinars on Thursdays for the rest of the year here for the next 3 weeks. Our next webinar together will be on the 3rd of January. But I wanted to do one today, and I'm going to probably do one a little bit in a couple of more weeks because I think I promised you guys that we would have a webinar going over some of the key factors and analysis that I do towards the end of the year. I haven't done that ever before with anybody, just kind of keep it to myself, but I think I'm going to share it with all of you guys this year. Just want to say hello real quickly. I know some of you are still trying to get in. Hello to Andrew and to Bill Curtis, David, and Glenn, JK, Jim Sheets, Johnny's with us, so is Josh and Kevin and Larry. Christine just came in, Nick and Mose and Nick here. Patty's here, Rick is here, Sam is here, Sri, Zachary, and Steven. Oh, and look at Eric joined us today. We should all be so lucky and blessed that Eric's joined us this morning. Being a little sarcastic. Thanks, Eric, and Mose too. So, all right. So just kind of a little recap of what's going on here lately, what we can expect here, at least for the next few weeks, foreseeable future. All right. So here we are on December 13th. We have a Fed meeting coming up next week. Roughly 10. Markets closed on Christmas Eve and New Year's Eve, right? No, I'm sorry, Christmas Day and New Year's Day. So I think a short day on the 24th, right? Christmas Eve, which is a Monday. So including today, we've got 7, 8, 9, 10, 11 full days of trading left. Right? I'll tell you right now, after tomorrow, trading is effectively over for the rest of the year. Okay? Now, the market's not going to shut down, but a lot of active trading is going to cease starting, if not today, tomorrow, into the end of the year. Okay? So what does that mean for you and I and everybody else? It's a dangerous trading environment. Okay? Unless you can be quick and fast on the trigger, it is going to be. If you thought these last 5, 6, 7 weeks were hard, were tough, these next 2 weeks are going to be probably 5 times tougher than that. Okay, so my message to you is this: if you can't handle that with elevated volatility, the VIX is at 21%. A year ago, I think the VIX was like at 12 or 13%. Okay, so the path of least resistance was up last year. Now, I would say by and large that's the case now, and I think what we're going to find is volatility is going to fall over the next couple of weeks. Now, I know a lot of you would say to yourselves, okay, but I've heard and I've learned that when volatility drops, that's positive and bullish for markets. Not necessarily, okay? When volatility falls, okay, we may have a slight to a modest bias upwards, but I think the expectation is that markets are going to have to rise. What is the catalyst to have the markets rise? Can anybody tell me? Over the next couple of weeks. Yes, there's a Fed meeting next week, but I think we pretty much already know what's going to happen and what they're going to say. And I will tell you, I think I'm pretty positive that they're going to raise interest rates one more time. And people who are on the bond, who in the bond market, are going to have a hissy fit, because that's going to almost completely flatten the curve out from Fed funds all the way out to the 10-year. Okay, you might see some bond selling going on, and that if we get a big jerk up in interest rates, we may have a big spike down in the markets. All right. That's what I'm talking about over here. Let's take a look at this for a second. This is the 10-year yield, right? Just pay attention here for a second. So when we had a big jump up in interest rates here, okay, the markets got slammed. Big jump down in interest rates here, the markets got slammed. Big jump down in interest rates, the markets got slammed. Big jump down in interest rates, the markets got slammed. You get the picture, right? Big jump down in markets. I think that was one day where the markets got hammered back in September. Okay. Same deal with in August over here. Okay. I don't think there was a lot of activity back in August. Volatility was pretty low back then, not as high as it is now. Okay. You get the message here. Okay. That markets don't like big shifts in price, and they may react accordingly here. So 2.9%, the Fed funds, if they raise it up to 2.5%, that'll be 40 basis points of difference between the 10-year and the Fed funds. Pretty amazing, right? So I suspect that what'll happen here after this, interest rates are going to move right back up towards 3%. Maybe not in one day, okay, but we may get a big jolt up and then start trending upwards for a few more days up towards that, probably up towards this 50-day moving average, okay? All right. I'm just going to tell you this, okay? Just, if you haven't slowed down already, just slow it down, please. If you've already slowed it down, you may want to ease on the brakes a little bit more about what you're doing. Just observe what's going on. Pay attention to the action. You're not going to miss anything. You may miss a couple of moves. I mean, listen. You know what? Not everybody trades the same way I do. I'm a swing trader. I make my money on swing trades, and swing trades require you to be with positions longer than a day, longer than 3, 4, 5 days, perhaps. Okay, so you've seen some of the bigger wins that I've had lately have been over several days. From time to time, we'll book a trade, a nice win intraday, but those are rare, few and far between, right? And we don't see those very often. It's great when they happen, but that is not the goal. That is not the approach. I'm not a futures trader, and a lot of futures traders trade in and out, maybe 5, 6, 7 times a day. That's not my that's not where I'm making my money. That's not where I'm doing all my trading. Okay, I'm trading options. I'm trading, and to day trade options, the volatility will just chop you up and spit you out. You don't have a chance. Okay, in the long run, you're not going to be able to make it. And why is that? It's because look at some of the gaps up that we've had. Gaps up, gaps down. Right? I mean that's what's going to chop you up, right? What if you tried to get on that? Let's take a look at the S&P 500 yesterday, right? Let's say you tried to get on that gap up yesterday. Let's look at that for a minute. Look at the 15-minute chart here, right? So this is Tuesday. We gapped up Tuesday and lost it all, right? And these are 15-minute bars, right? And so let's say you try to get long into that gap up, but we never really exceeded the opening Prince high, okay, in the first 15 minutes, and we started lower. You're in the hole big time. When do you cut? When do you sell? If you're an options trader, right? Down here. And by the time you hit over here, we came up, we started, and then you're starting to feel really, really good, and then we closed with that negative over here. Well, how about yesterday, right? We gap up yesterday. As an options trader, unless you went long into the close, and believe me, that was a miserable close there, and we're still in the middle of a downtrend in the overall markets. If you got lucky here for the gap up and you stayed in there for a little while, look at how poorly we closed. We didn't quite fill the gap from yesterday, but we came pretty darn close, right? And we were up 40 handles, over 400 points on the Dow Industrials. I think we closed up 160 or something like that. So what I'm trying to say is that this is a treacherous market right now. Pick and choose what you do, where you go, what you buy, and be quick on the trigger. Okay. Um, so that's that. And then Fed meeting next week. We talked about that. Where the markets are at right now. Do we think that that move on Monday was a good low? Let's take a look at the daily chart on the S&P for a second here. I'm gonna take that. And my lines are a little bit too thick here. So let's take a look at that here. Okay, you can even connect these lines here. Okay, so resistance everywhere on this chart, right? If you want to put a line in there, we could do that. And so what do these tails constitute? Tail here. By the way, if you have any questions or anything like that on what we're doing, just type it in there. So these tails are tests of that trend line, okay, of that support line over here, okay, and these are generally, we call these pukes, for lack of a better word. People puked it out and then it came right back up again. People puked it out and came right back up again. However, we're familiar with the pattern, and I share it in the room a lot, called the morning star pattern. Everybody familiar with the morning star pattern, okay? Let me put that up here for you. Oh, okay. So everybody sees this right here, right? Morning star pattern, right? Bearish candle, doji, bullish candle, right? Got that? Bearish, then a doji, and then a bullish candle. Let's go back to our chart. My chart though. There we go. All right. Is that a doji here? Bearish, big long-tailed doji, and bearish again. So that's not the qualification for a Morningstar pattern. However, as my good friend Rob Moreno pointed out on Mad Money just 2 days ago, we did have some evening star patterns. One over here, and one over here. Evening star is just the opposite. It'd be green, a green candle, followed by a doji, and then a red candle. Green, doji, and a red. Green, doji, and a red. And even up over here. Well, so you get the point. Okay, evening stars are bearish. Morning stars are typically more bullish. Okay, so I would tell you the more work that the market continues to do down over here, the more likelihood that we're going to break these lows down over here. Now, does it make any sense? I don't know. I mean, from a technical standpoint, if we continue to keep pounding this level down here, it's not going to hold. Okay, eventually it's going to break. All right, it's just the technicals. Okay, it's just we see some. We look behind here. Yeah, I'll save that for you. Look behind these bars over here. See this gray section over here? These are volume bars, right? And I know it's really a little bit hard to see because the price chart is overlapping on the volume bars. But if you could see very, very carefully, you see the elevated volume levels versus over here. Look at the summertime. Look at how low the volume is. And then you come over here into October. You get this big move here in September, and then October into November into December. You see elevated volume and much more of red candles, okay? Just put it together. Heavy selling on the down days means institutional distribution. Heavy buying on the up days means institutional accumulation, right? It's as simple as that. So, I mean, just to a man or a woman's eye, just look at it carefully. Just look at it with your eyes. You can see, plain and simple, a lot of red bars, a lot of heavy volume, institutional selling, right? So when institutions are getting out of stocks, they're the big holders of names. When we get rallies, what's going to happen to those rallies? Those rallies are going to be sold into, right? That's it is what it is. I know it sounds too simple and easy. You're thinking to yourself, oh my God, there's got to be something more sophisticated or much more complex than that. It's not. It's very simple. It's really basic indeed, okay? Now, if you want to get yourself caught up in the potential of, okay, well, I'm going to use those drops to start buying stocks, well, that's fine, okay? However, let's be mindful that most of the market, if not all of it, is in a bear market, except the indices. Except the indices, right? So the S&P 500, all-time high, right up here, about 2940, and we're at 2650 right now, right? So, see, 2650 minus 2940, that's about 300 points, roughly 10%, right? So that's, you know, we're roughly in correction territory, right? And if we come down a little bit more, you're gonna hear it all over the media, markets in correction, da 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 da. But we know more than that. We have more information than that, don't we? We know that most of the market is in a bear market. Energy stocks, look around, retail names, home builders, technology, semiconductors, staples. Throw me a couple other groups. I mean, probably probably 8 out of 10 groups right now are in a bear market. You can probably see that, right? So all of you guys, you know, have really are really super sharp. You're smart. You're quick. I love all you guys, but you've got to look at the market from a very simplistic viewpoint here. It's not brain surgery to take a look at this and understand the type of market that we're in. So if you do understand the type of market that we're in, you've got to change your tactics a little bit from what they used to be, right? Last year, and even in 2000 or late 2016 and 2017, we were pretty aggressive. We were strong. We were buying dips and selling the rips and so forth. And it was a good year for all of us last year, right? And even earlier this year was pretty good after that mess that we had to deal with in February. But the environment and the landscape has changed. I've been telling you guys that for the past few months. It's changed, right? So when the landscape and the environment changes, we also have to change the way we do things, the way we operate, because we view things differently, right? And we have to change the tactics, change the way we do it. Otherwise, we're going to get smashed. We're going to get smashed. We're going to get slaughtered. I have heard from lots and lots of people, not just here in the chat room, but everywhere, okay? And they're getting chopped up. They're getting spit out. They're getting clobbered. They're getting hammered. They can't figure it out. They're zigging when the market's zagging. They're zagging when the market's zigging, and they're just getting smashed. All right. Meanwhile, I tell them, hey, look, everybody in my chat room has been paying attention to what we're doing, and we're just taking it slow, playing it small, or even just sitting in cash and just waiting and watching and observing what's going on. Meanwhile, they're waiting for the next opportunity to come along, and then they're saying, "Whoa, chat room! What are you talking about, chat room?" And then I give them the link, and hopefully they come out here. But you guys are already in there. You guys are the smartest ones. I've talked with some people on the side. I talked with Johnny earlier this week, and he's had a tough time along with everybody else. I think everybody. I would admit a lot. I would raise my hand too if I had to ask the question. Everybody having a tough time? I'll raise my hand along with everybody else here. Okay, Yes, having a difficult time, having a challenging time. So I recognize when the odds and the probabilities and the environment is not in my favor, and I'll go to the sides. I'll go to the sidelines and just wait. Nothing wrong with waiting. Nothing wrong with waiting a little bit, because as long as the markets are open and as long as I wake up in the morning and I'm ready to go and I'm ready for opportunity, I can make some money. All right. It may not necessarily be today. It may not be tomorrow. It may not be next week, but it may be next year. Next year is only 2.5, 3 weeks away, and I want to have money. I want to be ready to go when the opportunities are there. I just don't see a lot of opportunity here. I mean, look, when I look at a trade, let's take a look at example number one, Amazon here. Okay, this is the Amazon daily chart, right? Pretty messy, right? Looks like it's a W pattern, perhaps. But look, it's doing all this work these last few days below the 50-day and the 200-day moving average. Below the 200-day moving average since the end of October, right? And it spent 2 days above it, but it only closed 1 day above the 200-day moving average. That's not bullish activity. But let's just break it down on an intraday chart here for a minute, okay? Look at the opportunity you've had to get long here on the stock and make money, okay? This is a high dollar stock. We know that options are very expensive on Amazon, right? But let's just go back for the past 3 days, just earlier this week. Monday, it was a mess on Monday. It came down to under 1,600, and if you bought that, congratulations. It's been up. It was up to 1,700 yesterday, so it went up 110 points from the low on Monday. You had to have faith that the markets weren't going to collapse. And I'm sure there's been a few times in the past couple of months that these big giant dips on Amazon, if they were bought, you made some good money on. Or one time we did in the EO. But look at that drop, and then we gap open on Tuesday, and just fell the whole entire day. Much like this looks just like the S&P 500 chart, doesn't it? Right? Gapped up, we started rallying back, and then we fell hard at the end of the day. Yesterday, we gap up really strong and then failed towards the end of the day. It looks just like the S&P 500 chart, doesn't it? Right? Well, I don't see you having an advantage here trying to day trade this thing. You certainly didn't have much of an opportunity because when the stock fell on Monday, what did the options do? Did the options go up in price or did they go down in price? Anybody? What happens when volatility increases, not just with the markets, but with options? Anybody? What did the options do? That's right, Brian. Prices went up. That's correct. So you're paying up for that opportunity, no guarantee, of course, for that opportunity to go from here to there to there to there, right? And believe me, if you got in here and you said, okay, I'm gonna jump in here, you probably got smashed here from about 1640 down to 1590. Even if you stayed with it, you probably got out here, right? Maybe made 30 or 40 points. I would suggest that perhaps I would guess that maybe if you bought an option at $40 down over here, you probably sold it at 50, and then over here you're kicking yourself when it went to like $100, right? Because in this environment, in this market, it's difficult to hold through something like this and then get in here. It becomes a hope and pray market, right? How much fun? Raise your hand if you have fun in a hope and pray market. I certainly don't. I mean, I joke around about that a lot, but it's true. You can't sit there and wait and hope for something to move in your favor. And while yes, yesterday's rally was nice and strong and sharp, the reasons for it are mixed. I don't know, other than the fact that Europe was pretty well bid the night before on Tuesday night, and Asia was as well too, and it just overflowed into yesterday for about 3 or 4 hours. Who can trade this market for 3 or 4 hours if you're trading options? You can't, right? You can't. Oh, well, I mean, you can, but you will lose your money. All right? You will lose. So why even bother playing? Why not just send a check to Wall Street And don't waste your time because you're going to lose. All right. So I want you guys to pay attention to what's happening in the markets. I've been throwing up warning flags all over the place every single day. I probably, I tell you guys all day long, hold your puts, hold your puts. I get a lot of criticism sometimes from some people. Well, I don't like losing premium on these puts. I'm losing money, Don't worry about that, okay? I hear it a lot. But we're in a bear market right now. Okay? How do we know we're in the bear market? Let's go to our monthly chart. Patty loves when I cover this. Okay? Look at this. Let me expand this out a little bit. Okay? How do we know we're in a bear market? This is the monthly chart, right? It's going to make a couple of circles here. Look at that. Look at that. Okay? I pointed this out back in 2015. April of 2015 is when we ran into the same situation. And the black line crosses under the red line. Okay? And we were in a bear trend over here. And we dropped from like 2,100 down to 1,800. Okay? That was 15%. Okay, so not your textbook definition of a bear market. It wasn't 20%. Oh, big deal. Believe me, if you were long stuff coming into the beginning of 16 from April, it certainly felt like a bear market, right? But so now we're seeing similar. We barely saved it in 2000 in the summertime over here, okay? But look at these cloud shadows for the last 3 months, right? Horrible month in October. Barely made it through in November. We got saved the last few days. And we got this dark cloud in December, and we're below the 20-month moving average. This is 20-month moving average, the dotted line over here. Okay. So, as I said on Mad Money, this was a big, huge warning flag. I did Mad Money off the charts with Jim at the end of October. I don't think he was very happy because of my analysis. I said we could be heading down to what? Here, 2,300. All right. I'm not biased. I'm just telling you what the charts are telling me. Okay. Moving averages act like magnets. Moving averages act like magnets, and they come back to these moving averages eventually. Look over here. We almost came back and touched that 200-month. I'm sorry, 50-month moving average back up this 200-month. God, we don't really don't want to see that 200-month moving average come into play, do we? That's 1539. We don't. Ugh. That would be a big. Anybody rooting for that? Hope's not. I think the Armageddon people are rooting for that one. In any event, I said, why wouldn't this 2,300 come in there? Where look at all this air between here and here, right? And we've broken the 200-day moving average and have been below it for a couple of months. That is an area where institutional buyers like to accumulate stock. They like to be long stocks. And especially when the 200-day moving average starts to bend lower, that's another situation. We saw last week the death cross in the S&P 500. That's another signal, all right? And I know a lot of people will poo-poo that. Oh, it doesn't mean anything, blah, 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 blah. It means something, okay? I used to manage managers who manage our money for Sunkist growers, pension money, $230 million, okay? All right? They told me what they look for. People who manage millions and hundreds of millions of dollars. They told me the things that they look for, all right? And that was 20 years ago. Still rings true today, okay? So I'm telling you right now, I don't care what anybody else says to you, it's meaningful. And if you don't believe it, that's fine. If you don't want to follow what the big money is doing, that's fine too, all right? I prefer to as I like to tell everybody, I like to ride on an elephant's ass. I like to be a fly on an elephant's ass. I like to walk around with the big elephant because that big elephant is putting money, is going to step in water, and when he steps in water, everybody gets wet. Okay. All right. So, any questions on anything before we go? I got a couple more minutes before the markets get turned on here. I know a couple of I did a Twitter chart today in real money. You guys are going to see that. Real quickly before you guys run, I know a couple of you have already taken advantage of this. It's going to be out there for another couple more weeks. You like me with the little reindeer ears on there. You can jump in there, and so we're raising prices in the beginning of January, but you can get in here and get this done before. Just go to our gift to you or go to Explosive Options. It's not on the slider any longer. But if you need the link to this, just let me know on the side today, and I'll send a link to you. You can get in for the 6 months. You can add if you're already long term, past 6 months or 1 year, whatever. You can get a little bit more time on that with the cheaper price. It's 30% off, so it's pretty good deal for you guys. So anyway, any questions on anything you guys had for me on the charts here? Let's see. So Larry said MACD was a leading indicator, right? Market traded sideways in early 15. No bias, but it was trading upwards until the MACD went negative. MACD was the tell in both cases. That's correct. Yes, that's right, Larry. And so the MACD's rolled over, right? I mean, there's no arguing that, right? You see that. It's right in front of your face. There's none of this, oh, well, maybe it'll cross back up again. We don't think in hypotheticals here. We don't think in maybes here. Sometimes we do, right? But I'm not willing to put my money out there on hypotheticals. All right? When I see a big giant puke in the market, I'm not going to buy that puke because there might be another puke right behind it. I'm going to wait and see if the markets rally off of that low. And if they do, then I'm willing to put some more money up there. Okay, let's take a look at Brian's question. Previous MACD crossover you circled to 12 to 18 months to turn back up. Anything to this length of time? That's a good question, Brian. I don't know. Everything it took that long to move back up, right? And like you said over here. So if I had waited until here, October, I've missed out on this nice little move over here. But waiting for that confirmation, which came in about November or December of 2016, right? I could have stayed with that trend all the way through 17 and even through September of this year. So yes, I missed 4 to 5 months of upside, okay, by not getting involved. I missed all this. I would miss all this stuff. Miss all this stuff over here, and then I got in right over here. I would get in right over here, right? So just because I like to wait for confirmation, that's just my preference. I still would have gotten in for a large segment of that move, right? Okay, good, probably like 18 months of that. Larry says, please send me the link. I have no idea where you're planning to end. Okay, I'll send you the link. No problem, Larry. Anybody else need the link, just let me know. Do I like the morning upgrade on Tesla? We in the spread trader, we have a what do we have? We have a Dave, what do we have? We're short the 380 put, right? Or a 380 call. So actually, no, I don't like the upgrade today. I wish it would have come on Monday when our trade is over tomorrow, because we have a condor actually that's expiring tomorrow. I don't know where Tesla's going to be opening up today, but we have 2 days to wait. So I would like all of you guys to sell 300,000 shares of Tesla this morning, or short it. Everybody in the room, sell 300,000 shares short and drive the price down. Can you guys all do that today for me? All right, Brian. All right. Consider it done. Believe me, you'll make Dave extremely happy. Come on, Dave. Start laughing. I know you're I know you're chuckling. Come on. Unfortunately, with that upgrade, it was a little not very timely here for us. It came 2 days early. But let's see how it is. Johnny said sure. Well, we'll see what happens. We're gonna pay attention and see what's happening over there. We do have a little bit of cushion, a little bit of room over there, but I think today's upgrade is gonna remove some of that cushion from us today. So let's see. Let's just kind of see how it goes here. I thought it was a really good trade. It was actually, but we've been faced with some of these nail biters here over the past 4 or 5 months. They haven't been, well, maybe even longer than that, right, Dave? Probably we've had quite a few of these things hit us on like the last day or two before the expiration. Anyway, we'll see how it goes. Any other questions on anything? It's about 6:23 right now. My time, 8:23 in Johnny's time, and 9:23 on the East Coast. So we're going to get rolling here for a minute. But I hope this helped everybody out a little bit. Just again, just a reiteration, just to take it slow, to play it small. Don't get too involved with anything. You'll chop yourself up, or you'll smash yourself around a little bit. And let's have a good day today. We'll get together and do another webinar in a couple of weeks and talk about some of the things that I'm considering into the year ahead. We'll review a little bit of 2018 and talk about 2019 and where things might be going. I'll try and put this out in the chat room in a little bit, the webinar replay. Maybe what I'll do is I'll put it on YouTube. That'll be better, and share it with you guys. Any questions from anybody else real quickly before I run? You're welcome, Sukesh. You're welcome, Larry. Everybody else? Anybody questions on anything? And remember, as Bob Marley said, don't worry about a thing, because every little thing is going to be all right. All right, guys. See you in the room. Have a great day. Talk to you soon. Bye.